Hey everybody, how you doing? This is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, September 26, 2019, and we again find ourselves in the final hour of the market. As you know from listening to this channel, I prefer to do the majority of my trading in the last hour, and more specifically, just as close as I can get to the close of the market. During the daytime, the algorithms, the day traders are moving prices around, but at the end of the day, the big boys come in, the market makers, the large financial institutions, and I feel like they're the best equipped. They have the most knowledge, they have the most technology, and I believe they move the prices to really what the valid prices of the day should be. They take it over from the day traders and the algorithms during the day. So I believe those are the most valid prices to make my buying and selling decisions from. So most of the time, about 99% of the time, I really don't touch any trades until the end of the day. And that's when I make my move, right? So thank you for coming today. I always appreciate everybody spending their time here, investing their time. I hope it's helping. I hope you're learning something about trading and that it's improving your trading. And, I hope you're getting some kind of return on the time you're investing with me. So anyway, listen, if you guys could just say hi in the chat, just so I know that I'm coming through loud and clear, I would appreciate it. The Dow has been all over the place today. It's been a crazy market this week. That is for sure. Very choppy. Dow's down 33 points now only. It was down much more. It was in triple digits down. NASDAQ's down about 41 points, about 0.5%. The S&P is down 3.81 points, down 0.13. So if you had just woken up a few minutes ago, you would have thought, oh, this is a pretty tame market, but this morning was a different animal. I usually don't get up that early at the market open, but I had to go to a dentist appointment, and I was like, wow, I forgot how crazy it is in the morning. I prefer to just sleep through that and let people battle it out and then make my move at the end of the day. Hey John, how you doing? Good to see you, sir. As always, I really appreciate you coming. Hope you're doing well. And if you have any questions today, John, you just please let me know. So, all right. Well, the plan for today, as usual, first of all, we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to view just a few minutes on some trader psychology. I think trader psychology is the most important skill you can learn in trading on your road to being a consistently profitable long-term trader, but it is a skill that you need to develop and that you need to work on daily, because our emotions are different from day to day. But it's very important in regards to trading that you stay level-headed, you do not become destabilized and let your emotions get the best of you. And sometimes they can. If the market's up and down and choppy, it gets frustrating and your emotions can kick in. And when your emotions kick in, that's generally when people abandon their trading plans. They buy too much or they short too much. They don't adhere to their stops. They don't adhere to their profit targets. So, the Zen state of trading, everybody, is being just flatlined, not too high, not too low, just baseline, perfect emotions. I know it's difficult. I understand that, but it's something we have to work on every day. So that's why I do like to do a little segment on trader psychology to hopefully that you'll hear this every day. Hopefully it will, you'll start to internalize it and that'll help you get your emotions under control. So, all right. After that, we're going to go down through my watch list. We're going to take a look at each stock in my watch list. We're going to take a look at all the technical levels. We're going to look at the support and resistance levels. We're going to look at indicators such as MACD, RSI, moving averages, ATR channels, And, in my opinion, the way I view trading is I look at these indicators as groups of buyers. And if you want to buy a stock, if you want to go long a stock, you really need to be in the company of other buyers. The more buyers, the better. So if I have one indicator doing something positive, I know there'll probably be some buyers based upon that indicator. But if I have two indicators, now I have two different potential groups coming in. And if I have three, that's even better. If I have four, that's even better. But, at a very basic level, if you buy a stock and you want it to go up, you want to be in the company of other buyers. And that's why I like to look for a confluence or a combination of indicators lining up. So that's what we'll be looking for. We'll go through each stock. We'll do a quick run through, maybe we'll select two or three that look decent. And then at the end of the day, I'll try to whittle those down to probably just one, maybe two at the most. And then after that, after the market closes, if any of you have any questions whatsoever about anything I discussed today, you need some clarification, please let me know. I'm happy to try to clarify that for you. Excuse me, if you'd like me to look at any particular stock symbols, I'm happy to do that and give you my humble opinion. And if you just have any basic questions just about trading in general or money management or trading psychology, please let me know. That's why I'm here. I'm here to help. So, feel free. Don't be shy. Just go ahead and type it into the chat. And we'll get to that after the market closes. So, all right. So that's the plan. And hold on for about 40 seconds and I will be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Jesse's here. Good to see you, Jesse. It was good talking with you last night, Jesse, and I had a good call last night on Skype. And looking forward to working with you, Jesse. I really am, starting next week. So thank you for coming by today, and hope we learned something today. Steve Burns, hey, buddy, what's going on? Good to see you. Honor to have you here, Steve. Really always is. He says, hi, Greg. This market has been a blender. Yeah. It has been a blender. This has been a very difficult market to trade in. If you would have just started trading this week, you would have thought, what is going on? Right? But that's part of trading. Sometimes it's smooth and easy, smooth sailing. Other times it's just, going down like crazy. And then other times it chops. I prefer it to go up, obviously, nice and smooth sailing, or I prefer it to go down very sharply, because then it's very clear that I don't have to get in positions and I can stay in cash, which I like to. However, in this market, you start going sideways, chopping around, you get signals, you get false signals, and it just kind of chops you up like, 1,000 paper cuts. And that's kind of the market that we're in right now. So Steve, thank you for coming by. Thanks for everything you do with your great books and your great website, newtraderu.com. And, all the wisdom that you impart on all of us. If you guys don't know, I studied under Steve for a couple of years and I've learned so much, and I'm so grateful to Steve for that. Such a great guy. So thank you, my friend. Murat is here. Hey, buddy, what's going on? Hi, all. Walking my dog. Hey, awesome. I'll be doing that after the market closes, hopefully. And Murat is our friend from Europe. So appreciate you being here. Hope you're having a good walk. And let's get to it. Let's get to it. All right. First of all, we have DDM. DDM is the double leverage Dow ETF. I bought this way back. I've had this trade for a long time. I bought this back on August 26th. I bought it because the previous day we closed under the 200. On the day that I bought it, we closed over the 200. This is a mechanical trade. There's no discretion allowed. I just hold this until the price either one, moves up and I phase out of all my positions, or two, it closes back down under the 200 day. But this is a good example here of taking a trade that is close to your stop. So if you're wrong, you can technically be wrong small in most cases. But if you're right, you have the ability for an outsized return to the upside, which is exactly what we had here. So bought here at 45.75. It's been moving up nicely during that first 2.5, 3 weeks. But ever since then, we've moved down, we've moved sidewards down. We have hit some profit targets, luckily, because I phase out before it's reversed. Let me show you actually today's chart. You can see. So again, this is totally mechanical. This is down a little bit today, but well off of its lows. This is the total mechanical trade. I did not hit any profit targets today because it's down. But anyway, I only have about 70. I only have about 25% of my position left now. I've sold all 75% at some profit points. So I'll continue with this trade, either scale out to the upside till I'm out of shares, or we close back below under the 200 day. All right, 5. So I did take 5 yesterday at the close of the market on the 25th of September. The reason I bought it, we made this nice strong move up, and then we had this downward move, pretty orderly, came back into the value zone. I like when prices come back into the value zone. I don't want to buy at overvalued levels. I like to buy in the value zone, hence at value levels. Moved into the value zone, did catch some support here, started to move sideways, which means that the selling abated. Buyers came in, which kept it from going down more. So we have been moving sideways. We have been consolidating. Everything looked good. We did have a V2 yesterday. Here is day 1. Day 2 did wash out day 1. Not a ton, but a little bit. But I also did like that it rejected the 20-day moving average. Almost tried to trigger a V1, but did not. But yesterday it did trigger a V2. Here's day 1. Here is day 2. Day 2 washes out day 1. Day 3 closes above day 1. In addition to that, it closed above the 5-day, closed above the 10-day moving average. Today, opened up flat, went all the way back, went all the way under the 20-day. It was looking pretty nasty there for a while, but we have recovered off the lows. This red line here is the exactly halfway from here to here of the washout bar. This is the bar that washed out the previous day 1's low. So initially, when I buy a V2 like this, my stop is going to be a close below the washout day. Here's the washout day. So right now we are above it by 11 cents. So if we close above 127, if we close above 127.90, I will be keeping the position. If it closes under 127.90, I will get out for a small loss. But this is a good example of a trade that offers you a small loss potential if you are wrong, or a nice 2, 3, 4 times, 5 times your risk to the upside if you were right. You never know on any particular trade whether or not you're going to be profitable or not, but you at least have to have an educated guess based upon your stop location and the technicals above you. Does it offer you a good risk to reward ratio? So, on any one trade, I have no idea. And, if I'm wrong today, I'll be wrong small, but I did have the potential for a large upward move. So we'll watch 5 very carefully here at the end of the day, and we'll see what happens. All right, gold. So I did buy gold on September 23rd. I bought it here at 143.75. I bought it because the 5 EMA crossed over the 20 EMA. This is another mechanical trade, no discretion. I stay in this trade and phase out to the upside as long as it goes my way. If it keeps moving up, I'll phase out till I'm out of shares. That is my exit to the upside. Exit to the downside is if the entry trigger was the 5 crossing over the 20, the exit will be the 5 crossing under the 20 EMA. So we bought it here. Next day, it did go up. It did go our way. I did get out of about 10% of my profit, 10% of my position at the higher range. It's not significant, but it is significant in the fact that it paid for a ton of commissions. Just that 10% move up and locking in the profits there paid for commissions. The market can't take it away from me. Then the next day yesterday we had a huge down day, which is unfortunate. But again, looking on the bright side, I took 10% off here. So I locked in 10% off here, and the big move down now is only on 90% of the shares instead of 10. So you always have to look for, you have to look for the upside. You have to look for the bright side. Today, we almost hit one profit target, but didn't quite get there. Now we are much lower than we were earlier on gold. But again, this is a mechanical system. So as long as the 5 EMA stays over the 20, I will stay in. If it heads back up, I'll phase out till I'm out of shares. Or if the 5 crosses below the 20, I'll go ahead and just get out. But these crossover systems are basically designed to, if you're wrong, be wrong small. If you're right, have the potential for an outsized gain, which will hopefully over time pay for the small losses that you're going to incur. And if you backtest gold, if you backtest using the 520 EMA, you're going to see that's exactly what it does. So, all right, that is gold. SPY. All right, so in case we have some new viewers today, I did want to mention, I do buy the SPY every single day. I buy it right at the close. I sell it first thing the next morning. It's not based upon technical levels. It's not based upon support, resistance, anything. It's just something I do every day. And the reason I do it is based upon this back-tested study from Liz Ann Saunders at Bespoke Invest. You have two options here. Option number one is you can buy the SPY each day at the open and sell it each day at the close. If you would have done this every day, buy at the open, sell at the close, buy at the open, sell at the close, since 1993, you've actually returned a negative 13.9%. But if you did the opposite, which is what I do, I buy the SPY each day at the close, sell it the next morning. So buy at the close, sell it the next morning, buy at the close, sell it the next morning. If you did this every day, this approach every day since 1993, you'd have actually returned 634.2%. So buy in the morning, sell in the afternoon. Since 1993, you'd have returned negative 13.9%. Buying in the afternoon, selling in the morning, you'd return 634.2%. So you can see over the long run, this has done really well. There is definitely an edge so far. Going forward, we never know. But since 1993, there's been a huge edge trading this way. And so I would rather trade a stock approach based on something that has good back testing than something that has bad back testing, right? And what this really means when you think about it is all the gains in the S&P 500, all the gains since 1993 have come in the after hours and the pre-market sessions. They have not come during the regular hours. So, there is an advantage to holding positions overnight. There is an edge to that. And I really like this graph. It shows what a stock trading approach with an edge, it shows over the long term how this edge plays out. But in between, there's normal fluctuations, ups and downs, ups and downs, ups and downs. So just because something works in the long term does not mean it works in the short term. So, very important to position size correctly so that when you do run into one of these drawdowns, which I promise you will, you're not losing too much of your capital. I use a 10% position size. So like if I had $100,000 in my account, I would buy 10,000 of the SPY each evening, sell it 10,000 of the SPY next morning, rinse and repeat, rinse and repeat. I've actually been using this since February 26th, and it's performed very well. So, okay, with that said, I did buy I did buy yesterday at 297.62 right at the close, and this has never happened before. I sold this morning at 297.62. Exactly what I bought it at. That has never happened. You know, I might be 3 or 4 cents off, but this was exact dead even. So was the trade a winner or a loser? Technically it was a loser, right? Because I bought it and sold it exactly the same price, but I had commissions, but not too much commissions. Dollar in, dollar out. So anyway, earlier in the day, I was like, boy, I'm super glad that I sold it up there. I'm actually still glad I sold it up there because it's underneath. So I will be buying this again today at the end, at the close of the market. All right, Square. So bright spot of the day. I did buy Square back here on the 24th of September. I bought it for a variety of reasons. First reason, it went under the 30 intraday, closed back over the 30 at the end of the day. That is signal number one. Signal number two is I had a beautiful V1. Here is day one. We thoroughly wash out the low of day one and then close above day one's close. That is a beautiful V1. In addition to that, we tested the previous low here. So this was the low of the range. We poked our head under the range, closed back into the range, which means it's a false breakout to the downside. So I did buy it here at 57.45. You can see the lines up here. These are the two profit targets I hit today. Let me show you on the other chart. Okay. So great trade today. It's up 3.3%. The green lines, I hit two profits on the green lines. Now, this is a very good example. The blue line here is the 50 RSI. Intraday, we did go above the 50 RSI. Now we are below the 50 RSI. So why is that relevant? It's relevant because unless we close above the 50 RSI today, I'm going to go ahead and just lock in my profits. You know, we play between the 30 and the 50 and the 50 and the 70. You know, if you buy at the 30, you're probably going to run into some resistance in the 50. And that's exactly what happened today. I did run into some resistance of the 50. Again, if it closes above the 50 RSI, I will go ahead and keep it as long as it stays above the 50 RSI, and I'll continue to trail the stop. But today, if it closed right here, right now, that is my signal to get out of the trade. But it's been a really good trade. We bought it right here. I've been very grateful for this trade, especially since, you know, it's been such a tough go in the market over the last couple weeks. So anyway, really glad to have this trade today. If it closes under the 50 RSI, I will basically 61.08. I will be getting out of the trade. All right. Last but not least is SSO. SSO is double leverage S&P 500. Again, this is another, by the way, I should mention that Square is a discretionary trade, right? I have discretion whether or not I want to get in, get out. It's up to me. But with these mechanical trades, these are mechanical. I want to trade these only based upon price action, nothing about how I feel or what the price action is. So I did buy the SSO back here on the 6th of September when the 10 EMA crossed over the 50 EMA. This is a little bit longer back testing or crossover approach, but it does back test well over time. It back tests profitably using SSO. So I did buy here at 128.66. I only bought a half position because it was above the value zone. I didn't really like it this high, but I still wanted to take the trade. So I bought a half a position. You can see since then it has moved up. We have exited some profits up here in profitable levels above our entry. Yesterday it closed just above our entry. Today it is slightly down, still above our entry. All right, we're missing one. Which one am I missing? Oh, QQQs. All right, where'd my charts go? All right, so the QQQ is our last our last trade. I did buy another mechanical approach. I did buy the QQQs back here on the 4th of September when the 5 EMA crossed over the 20 EMA. Again, another mechanical back-tested approach. This has worked out well and immediately moved our way. I scaled out of positions up here and up here and up here. Every time it had a big up, a decent up move, I did scale out of a portion. I am out of about 60% of this particular trade. Looks like I will be getting out today though, because you can see the 5 EMA now is under the 20 EMA. That is my sell signal. So you can see, using the phase out approach, you can see I did phase out of a majority of my shares at much higher prices. If I would have just bought it here on the crossover and gotten out today, yes, I still would have made a profit from here to here, but because I phased out, I nabbed some higher levels. So as long as the 5 EMA crosses under the 20 EMA, that will be my signal. So I think it looks very likely I will be exiting QQQ today. All right. All right. So listen, this is the part of the podcast that I like, spend a few minutes and talk about trader psychology. Again, I think it's the most important skill any trader can have, whether you're a beginner, whether or not you're a veteran. Your success is really going to depend on managing your emotions. So therefore the psychology of trading. But this is from Stephen Goldstein. Stephen is one of my favorite Twitter people. He has a great channel at AlphaMind 101. And by the way, he has a fantastic podcast that he does. He interviews traders from all over the world, all sorts of different traders. I'm actually going to be a guest on this podcast next week, so I'm really looking forward to that. But if you get a chance, go to his Twitter channel at AlphaMind 101. Subscribe to him on Twitter. Read his posts. Listen to his podcast. They're really good. I really think you're going to enjoy them. And he has some pretty amazing people on there that have some really good views on trading and trading psychology. But Stephen was a professional trader, and now he's a professional trading coach over in the UK. So Stephen says, if you are one of the few who make it in trading, remember, if you are one of the few, because not that many people do, right? If you are one of the few people who make it in trading, it is highly likely you learned to keep putting the ego genie back in its bottle. This is a lifelong battle, as every old trader will tell you. And ego is going to be your downfall in trading. If you have a big ego, you don't want to be wrong. You're going to take a position. It's going to go against you. You're going to think you're right. You're going to think the market is wrong, but the market is always right, and it will prove you wrong. I promise it will. And I'm always suspect of people who haven't traded that talk about how easy trading is, and all you have to do is follow the rules. And I'd say, oh, are you a trader? No, but I've read. And I'm always a little suspect when people tell me that, because until you're in a trader's shoes, you don't have those emotions bubbling up. I was at a trading conference in Las Vegas. I went to dinner with a very famous trader. He's a psychiatrist. Actually the head psychiatrist at Harvard Medical School. And he had a friend with him who was a occupational psychologist. So I had a psychiatrist with me and I had a psychologist with me. Very professional people, head of psychiatry at Harvard. And he is a trader. He understands trading. But the other doctor, the other occupational psychologist, he was at the trading conference and he was just learning about trading. And we were at dinner and he was talking about trading like, oh yeah, all you have to do is this, all you have to do is that. It's just a mindset. It's just a mindset. And I was sitting across the table looking at him, trying to sizing him up. I was like, all right, he's a psychologist. He acts like this is going to be easy. All you have to do is this. All you have to do is that. And I came away from the dinner giving him the benefit of the doubt. He seemed pretty disciplined. But I always wonder, I would have liked to have been a fly on the wall when he had his first losing streak, whether or not, he was Dr. Jekyll or Mr. Hyde. And my gut is that when he actually got into a trade, into a losing streak, maybe that cool demeanor went away. Who knows? I'll never know. But the point is, it's kind of an interesting story because it was like out of a sitcom. I just sat there and watched him, and I was trying to size him up because I didn't believe it. I've never met any trader that doesn't deal with this. I mean, so it happens. But the takeaway of this is it's going to happen. You have to battle your ego. Again, it's just a skill. Right? It's just a skill to put your ego away, be wrong. You're going to be wrong a lot of the time. So, I mention this every day, but you got to get those emotions under control, right? I don't care how you do it, but you have to do it, right? And it's a skill. And just like trading is a skill, but everybody talks about the skill of trading. I don't think people talk about the skill of keeping your emotions in check, although more and more people are doing it, right? Somebody like Steve Goldstein, that's what he does. That's what trading coaches do. Trading coaches aren't really there to teach you the technicals. I mean, they are at first, but after that, it comes down to psychology. So thank you, Stephen Goldstein. Really appreciate it, and really looking forward to being on your podcast. All right. Max. No, it was not Dr. Elder. Max, it was not Dr. Elder, although I did study with Dr. Elder. I studied with him one-on-one for 3 days in Vermont. It was really good. But no, Dr. Elder is a psychiatrist as well. But no, this was someone else who's at Harvard. Hey, Mount Doji, what's going on, bud? Mount Doji says, hello, looking forward to that podcast. I love Alpha Minds 101. You got to give us a shout out. I definitely will. I definitely will. So I'm kind of nervous for that podcast, honestly. I mean, some of the guests they have on there are, I was the head of Credit Suisse Trading Desk. I was the head at UBS. I mean, like some serious people on there, serious credentials and serious positions around the world in finance. And like, hey, I'm Greg. I'm just a retail trader. But anyway, I'm glad to be on. I'm really glad to be on. So, all right. Wow, I'm actually in the green today, all in all. That's fantastic because it was pretty ugly earlier. Pretty uglier. So we did crawl back into the green. So I'm very grateful for that. All right. Well, most of these charts I'm going to be able to use on my regular chart. Man, it's going to be so much easier. All right, so Apple. Apple was rallied quite nicely. It was down. Again, there's really no entry here. There's no proper setup. For me to get a setup, I'd have to pull back into the value zone here, look for a decent V1, look for a decent V2, possibly a close under back over the 50, possibly a close under the 30 back over the 30. So, Apple has stayed pretty strong. It's the relative strength of Apple compared to the rest of the market has been pretty strong. But there is no real, proper setup here for me to make a decision on Apple. So, all right, Adobe. Well, like to congratulate Steve Burns. Steve Burns did buy Adobe back here on the 24th. He bought this when we got close to bouncing off the 200, closed above. His thought process here was, okay, I'm close to the 200. If I'm wrong, theoretically, I could be wrong small. If I'm right, I have a lot more upside potential. So he did buy it right here. I don't know the exact price, 272, something like that. The next day, it went under the 200 day. It wasn't looking too good. But again, we make our decisions based upon the end of the market at the closing price. So at the end of the day, it did. And he, initially had a nice day. Today he's having another nice day. This is another good example. And I don't want to speak for Steve, but I would imagine, because I've worked with him for so long, that, again, we're looking close to 30 RSI level. he's going to be watching the 50 RSI up here to see whether or not this closes above the 50 RSI. Currently it's a 52.94, so I'm just guessing. I don't know what Steve's going to do, but I would imagine that as long as this holds above the 52 above the 50 RSI on a closing basis, he will keep it. If it sells off at the end of the day and closes under 50, I would imagine he would sell it. But that would be my approach. I'm not sure what Steve's going to do, but congratulations, Steve. Really great trade on that. My gosh, from entry to exit right now, you're looking at about a 4.72% trade in 2 days. So congratulations, my friend. Okay, so silver, we don't have silver here, so nothing on silver. In order for me to get interested on silver, I'd have to have some kind of a deep dip down to possibly down in this range, somewhere in here, maybe under 30, back over 30, or the 5 EMA crossing under the 20 EMA and then crossing back over for a reset for a new crossover trade. So nothing on on AGQ. AMD, we had talked about this last week or over the last couple of weeks. I said, look, this thing's moving sideways. It's probably going to break one way or the other. I just don't know whether it's going to be to the upside or the downside. And this day kind of was the start of the down move on the high volume. Yesterday, we went back down, reversed back up. Today, we went back down, reversed back up. Technically, V1 yesterday, here's day one, day two washes out day one, closes above day one, but it didn't happen in the value zone and the bars were too big. So nothing on AMD today, but nice recovery. Okay, Amazon. So we lost the 200 day. Yesterday we did move back up, close above the 250. Looks like now we're going to be closing below the 250. In order for me to get interested in Amazon, and I'm always interested in owning Amazon, I just have to be patient, wait for the right setup. My ideal would have Amazon come down, go under the 30 RSI, close back above, giving me a good risk to reward ratio. Alternatively, a close back above the 200 might be a potential entry, because a close right back above the 200. If I'm wrong really small. If it closes under it, if I'm right, and I'm fortunate enough to get a big move, it gives me a good risk to reward ratio. But nothing on Amazon for me today. Boeing has been really strong. We're just too high in the channel. We're up near the third ATR channel here, 65 RSI, so nothing there. Alibaba is one of those charts that I don't have, so we'll look over here. Yeah, so yesterday we rallied strong out after the big down bar. We rallied strong, but now we have a V1 to the downside. Here's day one, day two washes out day one's high and looks like it's going to close below. So nothing on Alibaba for me today. Caterpillar has had this big strong move up, way overvalued, way above the third ATR channel, now coming back down into value. Good thing we waited, right? Now we are back into the value zone, the green lines. We are starting to move sideways. This is good. So requirement 1, we make a new high. Requirement 2, we come back down into the value zone. Ideally, a nice orderly move back down into the value zone. Requirement 3, we move sideways, we stabilize, we show that the supply is drying up and it's not being able to move down. Now I would need to wash out a V1 or a V2 attempted down, and V1, V2 back up. So nothing on Caterpillar. What's happening? All right, DBC. Nothing on DBC here. Did have a V1. Here's day one. Day two barely washed out day one. Looks like we might possibly close above, but we didn't have any sidewards movement on this move here. So DBC is the commodity index. So nothing there, it looks like. Of course, DDM we have on our mechanical trade. Walt Disney. All right, so I did sell some puts on Walt Disney today. I have not sold any puts for a while, but the market's been going down. The volatility's been going up. Therefore, the premium that you get for selling puts going up. What I did, I sold puts down to $123 by October 11th. So what that means is if the stock price stays above the $123 price by October 11th, I will be able to keep all the premium. And the premium was about $42 per contract. So however many contracts you buy, you sell 10 contracts, you get $420. You sell one contract, you get $42. So as long as the price stays above 123, I will keep all the premium by October 11th. The reason I picked this level was it's right down here about the 30 RSI on the daily. We also have the 200-day moving average above it. This is on the weekly. On the daily, on the weekly, I have the 50-week moving average right here as a nice bit of support, and it also dovetails with about halfway of this big thrust up bar there. On the monthly, halfway of that bar and back into the value zone. So that is why I sold those. We'll see what happens. As long as it stays above, I'll keep all the premium. If it closes under, I will be assigned the shares and I will have to manage it from there. So hopefully it just doesn't go down there. But if it does go down there, and depending on what the price action does, I may have gotten a really good purchase down here. But we'll see. It's dangerous to sell puts. But it's just part of what I do. It's one of my profit centers in trading. But, the key point here is identify support and resistance on multiple time frames, position size small, just like you would with anything else. And I think, to me, it adds some balance to my trading approach. So haven't had a put for a while, so we'll see what happens. Etsy, boy, Etsy has continued down for 3 days. We have the low here, the high here. We have about a 50% retracement now. We're back in the value zone. I would actually be looking for some kind of V1, V2 entry here, but we made a higher high. We came back down. We need to start moving sideways. Consolidate, look for a V1, V2, and I'd probably target back up to the 200, but nothing there today. Ford, nothing on Ford. Facebook, boy, nothing there today, but we have the third ATR channel down here. We have the 200-day moving average. These two right here should act as some type of theoretical support. Ideally, if we closed under both of these and back over these, I think that would offer a good risk to reward ratio, but nothing today. 5, of course, we have 5 is right on the bubble. Currently, it is above 127.90 by 6 cents. So if it closes under 127.90, I'll go ahead, just take the small loss from yesterday's trade. If it keeps above, I will keep it. That's the plan. Gold did go negative on the day now. So I have gold. I'm going to stay in this position as long as the 5 EMA stays above the 20. Wow. Talk about two major down moves and up moves. I mean, huge bars down, huge bars up. Some people trade these. This is all they trade in the direction of the last bar. But nothing on Google there for me today. Goldman Sachs, we made this higher high here, come back into the value zone. I like that. We're starting to move sideways and consolidate. I like that. The bars are narrowing. I like that. Now I need one attempted downward thrust that gets rejected, reverses back up. That would be this is an excellent setup right now, but we need a V1 or V2 before we do anything. IBB, well, I took IBB back here or here. I can't remember now. Okay, I took it on the 16th. All right, so I did buy here when the 5 EMA crossed over the 30 EMA. It moved sideways, didn't do much, did go up. At least we hit one profit target. Then we had this big pullback here Luckily, it was a half position because we were under the 200-day. This was no fun to get out of, right? No fun. But am I glad that I got out? Oh, can you imagine? If I would have said, well, I'll give it another couple days, we'll see what happens. So very glad I got out. Now, again, IBB, it's a 36 RSI. I would be looking for, some kind of under 30 back over 30 to take another trade in this, but nothing there today. Okay, Intel. We moved up, we moved into the value zone, we moved sideways we didn't really move sideways, so nothing on Intel. Russell, I do like the Russell. We're still under the 1050 SMA cross, which is good. We moved up, we moved down. We are definitely moving sidewards, right? We've run out of sellers. Bars are starting to narrow. If I could get a V1 or V2 anywhere in here, it'd be a sweet trade. So I'll be watching that in the future. Johnson & Johnson. Well. Nothing here today. I did buy this back here on the 18th when we had this higher low V1. Here is day one. Day two washes out day one, closes above day one. Moved up. We scaled. I did exit the trade here because we had this V1 to the downside. Here's the high. We washed out the high, closed under the previous day's close. That's a V1 and locked in the profit there. And glad I did, right? That was a discretionary move, but I'm very glad I did. This would have been a monster. So nothing on J&J today. Coca-Cola is just moving sideways. Nothing there. Lockheed Martin, nothing much on Lockheed Martin. MasterCard had a V1 yesterday, but this bar is larger than 1 ATR, so really nothing on MasterCard today. Altria, looking like we're getting close to a crossover trade on this. It's up 11 cents. Is a 32.16 RSI. I mean, you could buy this, just get out with a close under 30, but I'm probably just going to pass on that now. Merck. We have a higher low V1, V2 here. We're under the 1 ATR channel. We come up, we come down. We did form a V2. Here's day one, here's day two, here's day three. Day two washes out day one, day three closes above day one's close. But to me, it's not valid because this bar here is pretty large, not quite 1 ATR. You know what? That's a tough one. It's actually, now that I look at it, I thought this bar was larger than 1 ATR, but when you look at the actual ATR lengths, it's a touch over 1 ATR, but nothing overwhelming. And now it is a nice V2. Here's day one, here's day two, here's day three. Day two washes out day one, and we are closing above day one's close. In addition, we're closing above the 50. We're closing above all the moving averages. I didn't look closely enough at it, but now I do like it. So let me run some numbers and see what I would need to buy on Merck here. All right, that's a round easy number. All right, so this is definitely a possibility for today because we have a higher low V2. We were under the channel, we went up, we came back down. We washed out the previous day. Today we're closing above the previous day's close. We're above the moving averages. We're above 50. MACD is positive. Yeah, I mean, if I don't buy that, I don't know what I buy, right? I mean, it's a higher low V2 with lots of good stuff. All right. Microsoft, nothing there. Netflix, we had that big rally yesterday. I decided not to buy that. I have my eye on Netflix still. I really do. But I'd like to see it come back down about here, halfway of this washout. I think it should hold some support here, but I'm not going to do anything with it today. Nike held its gap on earnings. That's good. Philip Morris, Had that huge move up after Philip Morris is not going to merge with Altria anymore. Reverse back, nothing there. Excuse me. PayPal, 2 days close above the 200. That's good. That's good. It's a 44 RSI. So, there should be some resistance here at 50. I think I'm just going to let this one go, honestly. The Qs, we have that. The 5 is going to close under the 20 EMA today. So I will be getting out and exiting the Qs for a nice profit. Snapchat, no. S&P, we'll be buying that again at the end of the day. That's our overnight trade. Square, so we're going to have to watch Square. So again, Square has been a really nice trade for us, but the blue line is the 50 RSI mark. If we close below the 50, since we already went above it today and now under, I will have to go ahead and just lock in the profits. That's the plan on Square. SSO, we have that. No, nothing there. The Qs, we had this big move back up. We came back down yesterday. Nothing there. Tesla, look at this, everybody. Elon Musk came out with some news. What a monster, up 6.22%. So I can't buy it there. It's right at the 1 ATR channel. Twitter, consolidating down here. I expect this to move whenever you have this 3 bars. Here's day 1, day 2, day 3, and then inside this bar, this is inside this bar. You should have some breakout. I'm just not sure which way, but nothing there on Twitter. UNG rejected that 200-day substantially. Now we're back in the value zone. I'd need this to move sideways. Look for a V1, V2. UNH, my goodness, look at this, guys. I've been watching UNH through the day here when it was holding support at the 3rd ATR channel and over the 30 ATR RSI. I was considering buying this if it held above the 3rd ATR channel and the 30 RSI, but now it's under 30 and it's under the channel. So this is very much under the 200-day moving average. So I'll watch this. I don't mind taking a half position in this. I know it's scary as hell, but sometimes that's where the reward is. But the key point is if it does close back over the 3rd ATR channel, there was no more sellers down here, that's positive. And if it went under 30 back over 30, that's decently positive. And we also do have a double bottom with a bullish MACD divergence as well. So I will watch that. Oil, nothing on oil. Dollar had a big move up there, nothing there. VIX was up much higher earlier, nothing there. Verizon just too high. Walmart was up earlier or moved back around. That's just too high. Energy moving back into the value zone. Want to see it moving sideways. Look for a V1 or V2 back up. XLF, nothing there today. This was a great trade for us. We bought this back here on the 28th of August with the close back over the 200, giving us a small loss if we're wrong. Nice potential move up if we are right. We scaled all the way up to here. Real estate, nothing there. Utilities, too high. Healthcare, did bounce off the 200, but I don't like this big day. And pharmacy. So, all right. Guys, give me 1 second, 30 seconds. Got to move the dog around. I swear, I think it's when I say like XLRE or Apple, she knows. So she's not having it. Give me 20 seconds. I'll be right back. Okay, thank you. I know she does that almost every day. It's very strange. She does it exactly at the same time. So, all right. So what I'm looking at today, a few things we have to take a look at. 5 is the current position. If it closes above 127.90, I will keep the position. Currently, it is above. Merck, let's take a look here. The close here was 83.60. So as long as it closes above 2 days ago's close, and it closes above the moving averages, and more importantly, it closes above 50. If it doesn't close above 50, I won't buy it. If it doesn't close above 50, I will not buy it. All right. U1H. Now it is back above the 30, but I want to see this close back above the 30, and I want to see it close back above the third ATR channel. Okay, then Qs, we know we're getting out of Qs. The 5 definitely is crossing under. And then square. Yeah. So currently that looks like it's going to close under where the 50 RSI was. All right. So really what it looks like to me right now is sell QQQs. That's a for sure. Watch 5. Watch UNH. Watch Merck. And watch Square. So a lot of things to do, right? Right at the very last second of the day. So I think what I'm going to do, so I don't have too many things to do all at once, I'm going to go ahead and I'm going to buy Merck.
Order partially filled. Order filled. Order partially filled.
All right, Merck is bought.
Order filled.
Five looks pretty good. I think I'm going to let UNH go. Okay, get that off the watch list. Okay, I have an order in to sell Qs at the very end of the day because it does look like we are going to close below the 50. We rejected the 50. So the Qs are going to sell. Merck I already bought at 83.90. I have an order in to sell the Qs, so that will happen at the end of the day. So really the main thing to watch here is going to be 5 and whether or not, so let me get this, so we've got about a minute. Let me get this queued up in case 5 does close below. Okay, so the level that I am watching on, so Qs are going to sell by themselves. We already bought Merck. UNH, I let go. Qs are going to sell at the end. We'll be out of that position. So the only thing I really have to watch here is 5 at 127.90. Currently, we're at 128.12. So I'll just have to watch this one manually. All right, well, it looks like it's going to
Order
hold.
filled. Partially filled. Order cancelled.
All right, so we got SPY exactly at 297. All right, so our new position on the overnight SPY trade is at 297. I did get out of square because it rejected the 50-day. That was a really great trade. Really happy to have had that trade. So we can take square off of our watch list now. We did sell the Qs. So that was a good trade, right? I mean, we did the crossover trade. We exited a bunch of stuff up in this range. Then came down, but did have a nice little rally yesterday. So we are now out of the Qs. Good. I was getting tired about talking about that trade anyway. Okay. Did sell the puts on Disney down to 123. And we did enter Merck. And we entered Merck at 83.91. 83.91.
Order cancelled.
All right. All right, that's it. That's it. All right, so listen, time for questions and answers. So if you have any questions or comments, please put them in the chat, and I will get to them quickly. Though, before we get to the answer part, I just want to hurry and put in my quick daily plug. Let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I do enjoy teaching. I've had really good success with my clients. I think they've been very happy with the lessons. I teach 5 2-hour Skype lessons. They're one-on-one, just you and I. You know, it's an entire course. You know, if you're interested, reach out to me. My email's in the description of this video. You can also reach out to me on Skype. But, you know, basically, you know, if you're interested, it's a good time, because I think that the 5 2-hour courses, I think you get a lot of value. I think the price is reasonable. I think it's a good investment. But, you know, generally before we even start the sessions, I like to have a 30 or 40 minute or an hour phone call with the prospective client, just to get to know a little bit more about them, you know, see what their trading journey's being, see what their approaches are, see what their challenges are. And then I can take that information and I can create a personalized lesson plan based upon that information and your current situation, your financial situation. And I really think one of the most important advantages of the one-on-ones is that, you know, you always hear me talk about having a plan, creating a plan. I don't think people really understand what a plan is. Like, they think, okay, I buy here maybe and I sell here, but it's so much more than that. And, you know, if we have the lessons together, that's what I'll do. I mean, I will literally lay out a step-by-step plan for you based on the information you give me. So anyway, you know, if interest and you want to have that, you know, introduction call, it's a free call. I mean, there's totally no obligation whatsoever. But you know, if you're interested, please reach out to me and we'll schedule it. And then second of all, if you like, this channel and you haven't subscribed, I would really appreciate it if you would. And if you like today's content, you know, if you found something helpful here, I'd appreciate it if you would hit the thumbs up button. It does help you to promote the channel out to more people. And there's a lot of people out there that do need help. And I get a lot of emails from people telling me, hey, I'm getting a lot of value from the channel. So, you know, help me help them, and just by hitting the thumbs up button. It's easy and it really does have an impact. So thank you. All right, so that's that. Let's take a look at some of the comments. Whew, man, I feel I've been talking like forever, huh? Mount Doji says, it is definitely a big league podcast. You definitely belong. Thanks, Mount Doji. Well, I hope I belong in the fact that maybe I can bring some good information to it. But as far as, their pedigrees and stuff, much different. But that's the good thing about that podcast. He doesn't want just hedge fund managers. He wants all sorts of different type of traders to round it out. Haroon, hey buddy, what's going on? Good to see you. How's it going? Do you have any questions for me, Haroon? If you do, please let me know. Wayne K, hey, how you doing? Wayne K says, do you sell the puts naked? I do. Yes, I do. When I sell puts, I sell them naked. I sell them cash secured puts. But, the key, Wayne, on those puts, though, when I sell those naked, I literally sell them only at a price I literally would want to have the shares at, based upon technicals. Marco, hey, Marco, what's happening? Good to see you, my friend. Marco says hi. Hi to you, too. Sampors, hey, how you doing? Hi. Low look good. Hi, low look good. Okay. Oh, low as in like lows? Aha. Let's take a look here. Close 110.75. Oh man, I hate to get you on a technicality, but yes, you're right. It does look good. It has a nice up move. It comes back down into the value zone. It does move sidewards, but technically today, yesterday's close was 110.75. See how we closed at 110.74? So from a technicality, it did not trigger a V1, but a penny one way or the other. Ideally, you'd like to be exact, but sometimes in the last few seconds of the market, you just don't know if it's going to end up 1 penny or not. But it does look good. Down into the value zone, consolidate, attempt down, rally back over, very close to triggering a V1, V2. Definitely close back into the above the -1 ATR channel, closed above the 50 RSI, closed above the 20. I like it. I really do. I mean, this is the washout bar. Today's the washout bar. If I were to have bought this, I literally would put my stop here. So a close under there tomorrow, I'd get out. It gives me a very small risk if I'm wrong and a nice reward if I'm right. But I'll tell you what, Sompors, if you have a good chart like this, and maybe you did send me this before the market closed. I was probably just talking and jabbering because I didn't have time to look at the chats, but I probably would have bought this today. Did you buy it, Sumpors? Because that does look good. That is a good setup, regardless that we missed the trigger by 1 cent. You know what I mean? But in the context of the chart, I would have bought that. 100% I would have bought that. So let me know if you bought it. Dr. Jorgensen says, Merck looks good. I think so. We'll see. We'll see. But I do like that it's a higher low V2, back over all the moving averages. MACD turned positive, stayed above 50 RSI. And if we're wrong, we're going to be wrong where? Here's day 1. Here's day 2. Day 2 is the washout bar, halfway the washout bar. So similar to 5, a close under halfway of the washout bar will be my stop. So if I'm wrong, theoretically, I'm wrong fairly small. If I'm right, I have a nice move to the upside possibility, and that's all you can do. Johnny says, I am in UNH for the long haul. Have you been in, how's it going? How's it going, Johnny? UNH. Did you buy UNH today? Or have you been in it for the long haul? Looks like it did close under the 30. Dr. Jorgensen says, better get a nice blonde dog sitter. Yes, that would be a good idea. Yeah, I did buy the SPY. Luckily had that order in way earlier in the day. So yeah, did buy the SPY today at 297 even. John says SQ. So I did get out. I did get out of SQ today, John. We hit 2 profit targets today, and The reason that I got out of the trade, John, was, we bought it. Man, these charts. So we bought it right about there a couple days ago, had a nice move up. The reason that I sold it today is because we went above the 50 RSI intraday, closed back below. So, it was a really nice 2-day trade. I'm not sure how many percent, but I think it was over 3% in 2 days. So, that's pretty good. Yeah. No, more than that. It was up 3.91 today. Yeah, so roughly from there to closed about there. Yeah, 5.67% in 2 days. It's a pretty damn good trade. But I did get out because that blue line there was the 50 RSI. And like I said, we rejected it to the upside intraday and closed back below. So that's the end of the square trade for me. PLAY, all right. Dave and Buster's. So I don't really see anything here currently as far as a new setup. It's at a 40-55 RSI. I kind of like to play above the 50 RSI or rejection of the 30 on the downside. It is moving sideways. It's catching support. I probably wouldn't take a V1 or V2 here because it's under the 1 ATR channel. It's under the value zone, the 1 ATR channel and the negative 1 ATR channel. If I were looking at play, I would be looking for at least some kind of move under back over the third ATR channel, ideally a V1 or a V2, rejecting the third ATR channel. And, the cherry on top with that would be that if it happened under 30, back over 30. So, a lot of requirements, a lot of requirements that it has to pass to have some kind of entry signal. So unless it has them, I just can't take it. So I don't see anything personally today on play, John. Max B, what was the ultimate profit target for skew when you were planning profit taking? Oh, okay, it's a good question. So you can see the blue line was the 50 RSI. My ultimate profit target, as far as me doing the math on my scale outs, was right here at the downward sloping 50 SMA, which also is in combination of the third ATR channel. So that would have been my ultimate profit target. If we would have moved through the 50 and kept on going, I would have been very happy to exit my entire position there. Does that make sense, Max? Simbinghi. I hope I pronounced that close. How you doing? Good to see you. He says, hi, Greg. He says, I managed. Oh, that's Bang He. Sorry, I had the name wrong. I had a nice call with Bang He last night in Singapore. Thank you for coming by. Good to see you. He says, I managed to wake up early. So stressful the monitor last hour. I got into your STNG. STNG. I didn't get into STNG, did I? I don't think so. Merck, about Merck today. Maybe type that in, but so great to see you. And it was a really good call that we had last night, and hope you learned something. All right. Okay, good. You did buy lows. I like that trade. Oh, you bought a call. Okay. My scan doesn't work real time. I think last hour trade maybe not suitable for me. I forgot to check STNG earning day and I entered the trade. So many things to check out. I cannot get filled when I put in trade. Oh, okay. My advice on your scan not working, I mean, my advice would be to have your own little watch list, Bing He, that you don't have to rely upon a scan. You can do your scans as well, but we talked about this last night with the real-time end-of-day trading. Um, I think it would be helpful for you. You can do the same thing on the weekly. You can do the same thing on the monthly. Okay, Johnny says, been holding UNH a couple weeks, down 5%. Okay. Well, I imagine healthcare is not going to go out of business. Bing He says, STNG, not a real V2 entry, but fulfilled a new criteria. Go below and above 220 MA in 2 days rest, wash out high, then gap up. Okay. Okay, so I don't think I can follow STNG on my end here. But I think after, oh, here we go. I typed it in before. Okay, so yes, good eye. We moved up. We definitely moved up. We definitely moved into the value zone. We had a couple days of sidewards movement, but then we broke to the downside. So again, we're going to have a couple downward, or, now ideally, if we could move sideways, have a big bar down, reverse back under, back over, close into the value zone. That would be a good trade. So, I think you're getting it, Bing He. I think you're starting to understand. Also go above ABV 50 RSI. Yes, right. It's a 45.93 right now. So good. You listened to everything we talked about last night. You were very good at that, looking at the, moving sidewards, if the bar's larger than 1 ATR, if we're under the 50 RSI or over the 50 RSI. So yes, you were a great student last night. I hope it helped. Okay, where did we actually end up? So the Dow ended up down 80. Boy, really volatile there at the end, wasn't it? So the Dow ended up down 80, the NASDAQ down 46, and the S&P down 7. All right, but thankfully, well, not bragging, but it is nice to say. I mean, I was green on the day, so that is important. All right. All right. Does anybody else have any other questions? Just wanted to see where a couple other stocks. So Adobe ended up 2.3%. Did end up over the 50 RSI. So it'd be interesting to see if Steve kept that. Amazon's down. Thank you for your teachings. You are certainly welcome. You are certainly welcome. All right. So last chance for questions. Otherwise, I'm going to get out of here, go for a hike. I have some lessons I have to teach tonight, so looking forward to that. I always really like looking forward when I have lessons in the evening time. All right. Well, it doesn't look like we have any, but Bing He, nice to see you. It was great talking with you last night. Thank you for coming by today. Thank you for getting up early to do it. Johnny, really great seeing you. Johnny says, have a great one. Tomorrow will be very green. You think so? I hope so. Bing He says, I modified my scan and come out with the list and go through charts by chart to come out with STNG trade. Okay, good. But a bit too rushed for me to enter this trade in this manner. Yeah, well, there's no trade there yet, actually. Max says, have a great hike. Do you take your dog with you? Yes and no. I go on 2 hikes. I go on the first hike by myself because it's, uphill, quite a lot of uphill in the mountains, and she's old Katie. Of course, Katie right over here. Love that dog, but she's a little old. She has some arthritis, so I go on the first walk by myself. Then I come home, grab a drink, and then I take her kind of on a nice, mellow, flat walk. So yes and no, but I do 2 walks a day. Toby says, thanks, Rick. I watched the video about the indicators and it was real good. Oh, good. Yes, because you were asking about the moving averages yesterday. So I hope that helps. And Toby, if you have any other questions, please let me know. Please let me know. I'm happy to answer. So Toby, thank you. John, really good seeing you, and you're certainly welcome. Max, thanks. Always great to have you here. Bing-Hee, great having you. Great talking with you last night. Johnny, always good to see you here, my friend. Sampors, glad you got that trade on Lowe's. Who knows if it's going to go up or down, but I really do like the setup and I do like the risk to reward. Dr. Jorgensen, good seeing you, my friend. Hope you made it home safely after your big trip to Pakistan. And yes, I did buy the Spy, and I will look into getting a nice blonde dog sitter for the 30-second breaks that Katie likes to take. And Wayne K, good seeing you. And yes, I do sell those puts naked, but again, I sell them only at a price I really would be okay with getting the shares, having the shares assigned to me. Mount Doji, good seeing you, my friend. How's your trading going? Like to see what you're doing and what positions you have. Murrit, good seeing you. Hoping you're had a good walk with your dog. And Steve Burns, always a pleasure, always an honor to have you here, sir. Thank you. Jesse, look forward to next week for our calls, and it was a great call last night. And I think that is about it. So, yeah, anyway, hey, just last thing on the way out, if you did like today's podcast or live stream, whatever you want to call it, please do me a favor, hit the thumbs up button, and listen, even share it on social media. If you find it helpful, and talk to your friends, your trading friends about it, or share it on social media, I would really appreciate that as well. And lastly, go out and do something nice for somebody today, right? Give them some good advice, give them a wave, give them a high five. Just say hello. The world needs more of that. And it feels like we have less and less of that in the world these days. So, let's do something nice. So, all right, everybody, that's going to do it for today. Tomorrow's Friday, last day of the trading week. And I hope Johnny is correct that we're going to have a green day today. That would be awesome. So, all right, take care, everybody. We'll talk to you later. Have a good rest of your day. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.